I'd like to welcome you back to the show. Jay Young is our oil guy. He's the guy we go to understand what's going on in the industry. He's a visionary entrepreneur, been in the business for many, many years. And he also has written the Amazon #1 best-selling book, The Upside of Oil and Gas Investing. Jay, welcome back to the show. Jay, you got muted. There somehow. You're good. There we go.
Hey, here we are. Andy, thanks for having me back on. I appreciate it. I look forward to us chatting it up about the oil business.
Well, I got to tell you, I usually am a ginormous fan of Trump, most everything he did, but I got pretty disappointed that he has said, well, how come the prices haven't gone down? We got this treaty we're working on with Iran. And the way I liken it is if he were to sign an order authorizing logging in the Pacific Northwest on a Tuesday, and he walks into Lowe's on Wednesday and wonders why the price of lumber hasn't dropped.
Yeah. No, I know, and I was on Newsmax and a few other my fourth or fifth interview today, and everybody's saying about the same thing. They're like, but I mean, what, Trump reads 5 or 6 newspapers a day, and he has since he was 12. The guy's smarter than this. I mean, it's not like that he knows that prices don't come down that fast. I mean, one thing that does happen that, when prices go up, they go up the pump immediately. I mean, there's no 21-day lag there. I mean, it's like when the oil comes out of the ground, and for it to come out of the ground takes a lot before that. But just when it comes out of the ground to when it goes to your tank, it's about a 2 to 3 week lag. So it's going to take some time for gasoline prices to come down. I mean, they are down 50 cents pretty much across the board in the past week. But you will see prices come down, but not necessarily so fast that it's going to make your head spin, because they're having to pay more for it. And if they're going to pay more for it, they're going to have to, have those costs go to the next person, which is your gas tank, in the future. So we'll get there, but it's just going to take a little bit of time. And Trump knows it.
Well, let me say one thing here. The deal with Iran and the Straits of Hormuz is not signed, sealed, and delivered. There's still, like today, there was a report that Iran may have either fired on somebody or told them to turn back. It's not signed, sealed, and delivered, number one. And then number two, it takes, like, for instance, quite a long time for any ship that did make it through to make it over here. And one of the other things we have talked to you about is this. Commodity prices and speculators can help determine the price of oil at the pump.
Mm-hmm. Right. Yeah, and there's like $125 billion worth of oil and oil-type products over in the Strait of Hormuz right now that's not moving. So it will move. It's going to move, and it will get to the hands needed and the people that need the oil. Slowly, it's not going to be fast, but this is all a political. To me, I feel like it's just political, and Trump's trying to get, trying to get some ground for the midterms, and so he doesn't look back in his last 2 years as a Democratic Congress and House of Representatives. So I think this is just a ploy for him to talk about this and to try to point fingers. Now, I will agree that because of what he's doing, and I say that what he's doing, he's out there talking to these people saying lower prices, and I believe that as soon as they as soon as they can, they will. If gasoline, they may say, well, gasoline stations say, let's just keep the price up a little bit longer. I don't think they will. I think they'll lower them faster than they normally would, because he's he's talking about it, and it's in the press, and it's all over everywhere. And I feel like that the gas stations will. Now, they're still paying higher dollar amount for oil that was produced a couple of weeks ago. So they'll get there, but whenever they can. But I feel like they will faster than that.
So
but $2.25 is ridiculous.
What is the price right now?
Price for gasoline or oil?
Oil.
Oil $71.47 as of today. It was up a couple of dollars. It did dip below 70, and I think that's the low we're going to see. I don't think we're going back down into where we saw it. I mean, it's $55 mid-December last year. It was $55, and gasoline was $1.90.
Well, not here, not in California, of course.
Not in California. Yeah, y'all haven't seen $2 gasoline since probably before Reagan.
Yeah, so
maybe Eisenhower.
Carter, yeah. So let me ask you this question. This is locally, our lifting costs of oil are really high. Could you explain the phenomena that the lower the price goes, the less supply we have, because it eliminates some methods of oil drilling?
Yeah, good question. And a good thought, because before the war, and I'm sure I mentioned this on your show, because I'm on once a month or so, and I know that I mentioned this because, once prices go down so far, there's places to drill in the United States, not where we drill with King Operating, but there are places that you can drill that, the break-even price is $60. Let's just say it's $60. So if you're going to drill wells and the price is $60, you're basically drilling the well for nothing. I mean, it's like you're going to spend $10 million to drill a well, and whatever comes out of the ground and reserves, and you get paid back, your internal rate of return is pretty much nothing. So you don't want to drill below $60. So you want to drill at $70, $80, $90. Now, every formation that's being drilled today has a different break even. They're not all the same. They're different. It's not a pool of oil underneath the ground. It's not Jed Clampett, shooting a gun and oil coming out of the ground. It costs a lot of money to drill a well, and it may cost. Right now we're on our board up here. I've got 2 wells that we're drilling into this year, and one of them is $6.5 million. One's $12.5 million. And we're drilling for oil, and they're both in Texas, but that's about the only similarity that you have between the two, because one's deeper. One's 10,500 feet vertical. We're going to go out 7,500 foot lateral, and one's 6,000 foot vertical, and a 5,000 foot lateral. So there's big differences in drilling wells, and also you look at 3 factors: how much it costs to drill, how much oil is going to come out of the ground, and at what price. Those 3 factors right there are what we look at. And if oil is below what our break-even cost is, our wells are like the ones that are $6.5 million. I mean, they're like $35, something like that. So if oil goes below $35, we won't drill them. And if the other wells are like $20-something, so we have a long way to go before we decide to pull up on those wells and not drilling. But what happened last year was when prices went down and they were at $55, $60, companies quit drilling for oil. And if they quit drilling for oil, that takes our supply off the market, because they're not drilling wells. And if they're not drilling wells, then they're not putting new oil on the market. Well, then that's not good. That's not good for the United States, because we need oil, and we need oil really bad. So what happens is, all of a sudden, when oil prices are higher or lower, people quit drilling, and then the price will go up because supply and demand, not enough oil for our demand. And all of a sudden, this is what I thought was going to happen before February 28th and before the war started. I saw oil and gas prices moving up because we weren't drilling for it. But now the war started, all of a sudden price went up to, 70, 80, 90, went to $100 a barrel. But now, prices are starting to come down, and we're going to see, less oil companies that want to go drill at these lower prices, but there are going to be some that have to. If not, the prices will continue to go up because it's a precious commodity, and we need it every day.
Jay, we're going to be back with more of Jay Young, listening to the Andy Caldwell Show. Stay tuned.
The only talk show on the Central Coast that exposes what the politicians in Sacramento are doing. You are listening to the Andy Caldwell Show.
I'd like to welcome you back to the show. Our guest is Jay Young. He's our oil guy, founder and CEO of King Operating Corporation, and author of the #1 Amazon bestseller, The Upside of Oil and Gas Investing. So we've been talking about Trump's unfortunate claims that the oil industry is gouging at the pump, when in reality it could take weeks or even months for the oil that was hung up in the Straits of Hormuz to make it through the straits to a pump near you, right? They got to make that ocean voyage and then go through a refinery, and then they get distributed to the local gas stations. So he can't get that immediate price drop he wants. So one of the other things we've been talking about, Jay, is the fact that here in California, the government has shut down the oil industry by, prohibiting new oil and gas wells. And even Santa Barbara County, where we are, wants to amortize existing wells and shut them down too. And in the meantime, the California Resources Board and the local air quality management districts are breathing down the necks of the refineries, making them buy auction emission credits and blah, blah, blah. Well, we're not the only ones that suffer from having too few refineries. To what degree is that a big bottleneck across the land?
Yeah, well, we need more refineries. I mean, we have a huge shortage. I mean, we need like 20, maybe 30 refineries, and they're only about 20 billion apiece. So it's we need refineries.
How much are they?
20 billion.
Wow.
Apiece. Yeah, I mean, and the time necessary would be incredible, But the regulatory, I can't imagine even thinking about. I got to make a living off of this refinery and putting one in. I just couldn't even think about that. But we need a lot of refineries, and the reason why is because like right now today, we're a net exporter. All right, let me break that down for you real quick, because it doesn't mean it sounds like we're producing more oil than we can handle. That is not true. We need 20 million barrels a day. 20 million. We produce 13. We're a net exporter. I don't even know if we're really a net exporter, but that means that we export more oil than we consume. Okay. Now, if we included the 7 million deficit, then that would be a huge problem, because we're bringing in, out of the 13 million barrels that we're producing, the majority of that oil we cannot refine. We don't have the ways necessary to refine that oil. So we have to ship it overseas. That's why we're a net exporter. We're exporting oil, and it isn't because we're overflowing with it. It's because we can't refine it. And if we don't have the refineries necessary here, we're going to have to pay more for it, because obviously to export it and to bring it back or to buy other people's oil, we have to pay for it, and it's more expensive. But refineries would help that situation and help that cost. But we don't have the refineries, and if we don't have the refineries, then we're not going to be able to do it, which is exactly what I'm saying right now, is that we don't have the refineries. We need them, and if we had them, we wouldn't like Venezuela right now. Venezuela has all this thick oil. It's like the oil that you can literally walk on if you poured it on the ground. It's that thick.
Wow.
And that type of oil is what our refineries on the Gulf Coast need. We have like 40% capacity in some of these refineries. Only 40% of these refineries, and we're shipping oil off seas. Why? Because it's the wrong type of oil. We need that thicker oil. We need that oil that is a higher gravity or lower gravity. We produce a lot in the Permian Basin and the Eagle Ford, an oil that we cannot refine here in the United States. So we end up shipping it overseas and getting it back, either that oil or we buy their oil because we can't use it. Like I said, it won't go in our refineries, but the oil in Venezuela all day long. We love that oil on the Gulf Coast. We could produce it. We could refine it. We could use it. It would be so easy to have that oil. And that's why it was really good. You know, a good feather in, President Trump's cap was for buying that or taking over the Venezuelan oil. I mean, we can talk about he stole it or whatever people have talked about. I mean, they stole a lot of our money. Venezuela did, or a lot of the public companies, Exxon and other companies that lost a lot of money down there, because they stole it, and so we stole it back, I guess. But for us to have the reserves in Venezuela, it's really big for the United States, and it's really going to help us out in the future. How much? I mean, 3 to 4 million barrels a day is the maximum. I think we could probably get out of there. 3 to 4 million barrels a day. That's going to take 5 years and $100 billion. So it's not an easy fix, but it is something that will help us in the future.
Well, and what about that nasty, horrific Venezuelan earthquake? Do we have any idea if that's going to obviously lives are lost, and we're sorry for that. And buildings, I saw videos of large buildings just collapsing. They must not have earthquake standards in their construction standards.
Right.
But is that could just disrupt exports?
I haven't heard anything about where the earthquakes were compared to any oil fields, or if that's going to hurt any disruption. They're producing about 1 million barrels a day now, maybe 1.5 million. I mean, they're getting underway, but it's not a big, huge thing. So I don't know. Like I said, I don't know if it hurt any of the oil tankers or oil field producers or not. I don't know. That's a good question. I need to find out. And
what are you hearing about the Straits of Hormuz? Are the ships going through?
Yeah, well, the big thing is there's like $125 billion worth of oil that's sitting in those waters over there. They haven't decided that if they want to come through yet or not. That was in the Wall Street Journal this morning. Interesting article. It just said that, hey, they're just sitting there and they're not sure if they're going to be able to come. They're not sure when they're going to be able to come through the strait. And I'm sure they will, but they just haven't yet. But they will. I'm hoping they will. We need that oil.
The other thing I was going to ask you is, a lot of people forget that only about a half of a barrel of oil actually goes to fuel. The rest of it goes to byproducts and derivatives. Mm-hmm. Does Texas have a lot of those factories that make, for instance, plastic or some of these other derivatives and byproducts?
Yeah, we do, and we need more. But I think we're going to cover that up with data centers now, because I think that's the next wave, and we're having those put up everywhere. But yeah, we have probably 15 to 20 different refineries or smaller refineries, or like you said, making products other than oil. Like 6,000 products that need oil. 6,000 different products. You're right. 42% of a barrel of oil goes to gasoline for your car. The other 58% goes to the 6,000 products that are needed around the globe. So there's a lot of products that need it. I mean, this phone. I mean, I've got my AirPod case here. I got my pen. All these different products that need it. There's a lot of plastic over there. I got some plastic over there.
Well, tires, perfumes, medicines, plastic. This is one of the things I think the oil industry did a really bad job, almost a non-existent job, to explain that a windmill or or a solar panel may be able to replace a smidgen of our energy needs, but you can't make plastic from a solar panel. You can't make a solar panel without oil. You can't You can't run a wind turbine without oil. You can't make a car without oil. You can't build a hospital without oil. And I feel like they've done a really bad job of explaining that.
I agree. I've seen some commercials, that talk about all the products, but it's not an oil and gas. It's not an oil and gas company, but it's other companies that have talked about the other products that are needed, or other products that need oil really bad. But you're right. I mean, it is. There's like I said, 42% are gasoline. The other are, all these different products around us that everybody, it's all needed. For sure.
All righty, Jay, we're out of time. Thank you so much. Congratulations on your Amazon #1 bestseller, The Upside of Oil and Gas Investing.
Please go to our website. Love to send somebody a copy of it. Go to our website and fill it out.
We'll be back tomorrow. Don't forget the show. Thanks for being